Come on, man. Come on. What's going on? Today we're going to be taking a look at an article published by Forbes just a couple of hours ago, and it looks like a lot of people are kind of pointing at this specific reason for the major dip in cryptocurrencies of the past 24 hours or so. So without further ado, let's go ahead and take a look and see what all the fuss is about. Should be good. New Jersey Attorney General issues cease and desist order against multi-billion-dollar Bitcoin financial services platform. Oh, here we go, baby. Blockfi. According to a draft press release from the New Jersey office of the Attorney General, the Bureau of Securities is planning to issue a summary cease and desist order to New Jersey-based multi-billion-dollar Bitcoin financial services platform, Blockfi, to stop offering interest-bearing accounts. And by the way, I think when they mention interest-bearing accounts, they mean the ability to give in your crypto and almost have it look like it's DeFi, where it's like it's like you're in finance where you just deposit your crypto into a vault and they give you a return on it. That's kind of what they're looking to stop BlockFi from doing. If signed, this action could be the first of its kind against crypto lending platforms that have seen rapid growth during the recent crypto bull run. Since its inception since 2017, BlockFi has raised $500 million in private funding and has a valuation of $5 billion. So definitely no small company. The undated, unpublished draft... oh yeah, I thought it said outdated. The undated, unpublished draft contends the BlockFi has been funding and facilitating its cryptocurrency lending and trading operations, at least partly through the sale of unregistered securities in alleged violation of relevant securities laws. The New Jersey-based firm offers interest rates between 0.25% and 8.5%, depending on the crypto asset and the deposit size, in addition to a trading platform and Bitcoin rewards credit card. In comparison, according to the FTC, the national average for interest in savings account is 0.06%. What a joke. While 10-year Treasury notes yield 1.19%. Looks like they're kind of going after them and kind of marking the rates as something that looks, I guess, a little bit scammy. Is that what it is? The draft statement goes on to highlight how decentralized finance platforms known in the industry as DeFi do not offer FDIC or SIPC insurance like traditional banks and brokerages. However, while BlockFi offers similar savings and lending platforms to those that operate on top of decentralized ledgers, such as Uniswap or Compound, it is a centralized company. And I think that's kind of what the main point here is, that it looks like they don't have technically an issue with DeFi per se, but they don't like that, I guess, BlockFi is kind of I guess, positioning themselves as DeFi when in all reality they're a CeFi, right? In a comment provided in the document by Acting Attorney General Andrew J. Brook, our rules are simple. If you sell securities in New Jersey, you need to comply with New Jersey's securities laws. No one gets a free pass simply because they're operating in the fast-evolving cryptocurrency market. Our Bureau of Securities will be monitoring this issue closely as we work to protect investors. Oh my god. Love it. While Bitcoin and Ether are widely believed to be commodities based on the SEC and CFTC comments and actions, other assets supported by BlockFi such as Chainlink, and Uniswap have less clarity. If the cease and desist is eventually signed, it could be precedent-setting for how states could deal with other yet to be categorized assets. That's gonna suck, dude. And then obviously the BlockFi CEO had pretty much tweeted the other day that late Monday evening, BlockFi received an order from the New Jersey Bureau of Securities regarding BlockFi interest account operations in the state of New Jersey. We remain fully operational for our existing clients in New Jersey, and he also noted that the order calls for BlockFi to stop accepting the new BIA clients residing in New Jersey beginning July, which means that starting July in New Jersey, you won't be able to access any of these accounts. Let's go ahead and take a look at Twitter real quick. This is pretty much where they included that little tweet from the, I guess they said, one of the big guys over at BlockFi. I guess this is the guy that runs it. Come on, man. I mean, it's the same thing, you know. I see why they're going after them. They're saying it's the security stuff, obviously, as usual, but it looks like they're really attacking them for offering people higher interest than is widely accepted already by traditional finance. And I guess that's kind of where BlockFi is in this predicament, where it's like they're positioning themselves as DeFi by providing these DeFi related rates. And by the way, I don't know how they get these rates because traditionally, yeah, like it's there's no way you're gonna get 8% on whatever you're getting. I would assume that they're using some of these lending platforms. To be honest with you, that's what I would assume they're using. But obviously, people are going through them to use it. And by that I mean like Aave, Compound, etc. The only thing though is that, and I'm gonna bring it up here because I didn't even realize this the other day. Mr. Whale, his name is the Crypto Whale on Twitter, straight up says BlockFi is a Ponzi scheme. Now, hold on, stick around, trust me, this will be interesting. You take a look here, in their terms and conditions, it clearly states that they are not responsible for any loss of funds resulted from cyber attacks or technical difficulties. And if you take a look at some of their terms and conditions, I mean, I don't know if I can zoom in here on my phone, but you can go ahead and pause the screen and take a look there. But essentially, they're saying how most traditional banks or financial instruments, I guess, that allows you to save money, they are usually FDIC insured. So if there is some sort of loss in funds, you're covered up to a certain amount by the U.S. government, I guess, or by the Treasury or something like that. You're covered essentially. With BlockFi, you're not. And apparently, with I guess a lot of these different traditional finance, or what would you even call these, like DeFi platforms, a lot of platforms that are similar to BlockFi don't offer the same thing because they're not technically a bank. So I think to call them a Ponzi scheme is a little bit much, but I would definitely recommend that if you're going to get into any of these like centralized platforms, you're probably going to want to get into like Gemini or Coinbase or something like that. I think they're FDIC insured actually. I hope they are. I don't keep any money on them anyway, so to me it doesn't make a difference. But it's like, if they were making the cease and desist based off that, I would be totally fine with that, to be honest with you. Like that would make sense, because I think a lot of people have this false sense of security that they're safer on these platforms. Meanwhile, like they're like, meanwhile, like the Wild West is holding your own wallet and private keys, which is honestly completely opposite from the truth, right? Like you're a lot safer if you're the only one with access to your account and you're just holding your crypto there. Or I mean, obviously, chances are if you want to get interest on it, you're going to use a DeFi platform, which of course introduces smart contract risk. But the thing is, if they're using the same platforms, then not only do you have smart contract risk because they're using the same ones, but you also have what do you call that? This counterparty risk. So it's like it's even worse, and you get worse yields because they need to take some off the top, right, to pay for the expenses. So, platforms like BlockFi, although they make it easier for the traditional investor to get into crypto and get these like juicy yields, it's especially with that little note there that Crypto Well mentioned, the fact that they don't cover anything in case of losses. There really is no point to use it. there really is none, other than the fact that it's just easy to use, and that's why I cannot wait for DeFi to catch up to like the UI and ease of use of the everyday person, so that people can start using actual DeFi and not these centralized platforms posing as it. I hope that the SEC or New Jersey, whatever SEC or whatever they want it, whatever they call themselves, I hope that they don't end up actually taking them to court and and end up actually going through and suing them, because it's just going to make everything else worse for people in New York, New Jersey, pretty much anywhere in the U.S. actually. It's just going to make it worse instead of pretty bad precedent. They mentioned Chainlink and Uniswap in there as well. Huge Link Marine's about to lose it, I tell you. Oh man, that's crazy, bro. I saw that article yesterday, and someone had tweeted me saying, "Oh, chill out, Hunter. It's not that big of a deal." It kind of is a big deal. Honestly, now that I think of it, it's a big deal because it does set a precedent if it does go through. Do I think it, garners the drop in price of cryptos around the board? Of course not. None of this stuff does. I mean, listen. If you've been involved in crypto, like you're not really relying too much on the government to be like the helping hand. You know what I mean? Like I don't expect the government to be like to be like tomorrow. Hey, you know what? Let's go ahead and strengthen adoption for crypto. Let's do it. Like, no, dude. No one expects that, okay? No one expects that. Again, we all kind of expect the opposite. So, to me, it is what it is, just another article. But again, I do hope that it doesn't go through. That's for sure. Nonetheless, that's what I woke up to this morning, or went to bed to last night. I woke up to this morning. Let me know what you guys think down below. Is this an actual issue? Am I bugging out? Let me know, man. All right? Yeah, it's good talking to you guys again, and see you on the next one, all right? Peace out.